Good afternoon, this is Bob Iaccino coming to you from the CME Group trading floor in Chicago. Talking energy, let's talk crude oil, which had a big jump today, almost 1.75% higher, going up to 69.75 on the high side, finishing near the highs, up about 1.7% even. And API and EIA inventories are part of the reason. Now, API showed a build, and that was not supported by the EIA. It wasn't much of a build. API showed a 38,000 barrel build versus 522,000 barrel draw that was expected. Also showed a small build in gasoline inventories, but EIA, which is the more important, more watched headline of the two numbers, contradicted that completely, showing a 2.6 million barrel draw in crude oil, and probably more importantly, a 1.6 million barrel draw in motor gasoline inventories. So now we remain, in terms of the inventories of motor gasoline, coming into the end of the driving season, 5% higher than the 5-year average. And that's kind of a dip because we were 6% higher than the 5-year average last week. So that draw versus the average put a big boost into prices. Now, refinery utilization rates fell slightly, down to about 96.3% from 98% and change. 98% is basically full capacity. It's probably a little bit above what the market considers to be full capacity. And pumping out at that kind of a level, you would have seen the gasoline inventories probably come out flat to maybe a small build. But that little drop off was enough to show a draw in motor gasoline, and that's really the important figure. The gasoline inventories are much more important than the crude oil inventories at this stage, considering the summer driving season is winding down, officially ending this coming weekend with the Labor Day holiday. Now, on top of that, we saw a gasoline demand boost. Okay, the rising gasoline demand came from a much watched indicator of week-to-week gasoline demand. So weekly demand reached its highest level based off this indicator, which is in the EIA data, since 1991. It's motor fuel supplied to the market, and that came out at 9.9 million barrels. Again, that is the highest level since 1991. So all of these aspects of the API and the EIA report combined pointed to much, much higher prices, which we got today. And again, remember the volatility of these numbers. We had a 10 rig drop in rig counts last week, 13 of those being crude oil Permian, and then a couple of rises to offset that elsewhere. But if you continue to see that, which is coming out on Friday, that could potentially put a cap on this price rise. But so far, technically, fundamentally, crude oil prices rising and look like that's justified. This is Bob Iaccino talking crude oil from the CME Group trading floor in Chicago.